Okay, ladies and gentlemen, welcome to the latest episode of Boom, Bust, and BS. Obviously, your usual wonderful, talented hosts, Anthony Milewski, Christian Purefoy, and today we have a special guest, Jamie
Jamie
Strauss.
Strauss, thanks for joining us today, Jamie. We're
Hey
kind of
guys, thanks
excited to
very
chat.
much.
For our viewers and listeners out there, quick little background on Jamie. Jamie had a boutique firm that he sold to BMO, and then later went on to found Digbbe, where he's the CEO and chairman. And I think, and Jamie, you correct me if I'm wrong, but you're kind of focused on responsible investing, ESG, and all sort of related things. And it's a kind of an interesting time to have this conversation because now we have a complete shift in American politics. We have Donald Trump as the president. We have Doge going on, and really what I would call a pretty brutal reaction to anything that's perceived as being liberal or related to these policies of Democrats, for better or worse. It just seems like there's this big reaction. ESG as a term, people are kind of moving away from it, and notwithstanding all of that, we still are in the mining business, and we still need a license to operate in the countries where we operate. And so, what's happening? I mean, what's happening out there? I guess, why don't you tell us what you see as the thing that's going on?
Yeah, thanks, Anthony. Thanks, Christian. I mean, also for having me. And yeah, I think we're at a transformative or transformation moment. It's a bit of a kind of wake up and see. And there's almost been a bit of kind of reality check. A lot of people are really frustrated with where things are. We're not getting a lot of the equity impact that we thought we would with some of the things going on. And I think a lot of that's connected to some of the things you've outlined there. I mean, if you look at ESG was a busted flush. You used the word BS. It was BS. There was a lot of stuff that basically didn't mean much. And frankly, the mining industry pushed back on quite a lot of the stuff and said this is compliance and cost. And it didn't really add any value. And I completely agree. But you then kind of see what's now falling out of the bottom of the funnel, and you're kind of saying, okay, why are we less than 2.5% of the MSCI index as a sector? Why are we not getting any traction? Why are we not getting fund flow coming into this when you've got gold at record highs, you've got the critical minerals at everybody's dining room table and broadsheet and being spoken about in the White House as the most important geopolitical situation? Why are we not getting the love and the attention? And look, I think there's lots of things, and you could talk about, are we going to go negative rates, et cetera, et cetera. But I think the key point on what we can do and what investors are demanding is that how do we get access to that capital? Mining companies are struggling to get access to capital. They've been unable to credibly prove they're managing the risk and acting responsibly. And the game plan or the rules for investment by major institutions have changed over the last 10 or 15 years. They get paid for lowering risk in their portfolio and getting the results that come out of that. And, I think it was McKinsey, Anthony, who came up with a stat in about 2018, 2019. I think it's probably improved since then. 84% of all projects go over budget and beyond time. That's not great, particularly when you add in the next statistic to say that the projects that go over budget by 42%. Well, that's just wiped out the equity shareholder. One swell swoop. That's not a great advertisement. But here's the trick. If we can effectively professionalize these companies and move the communication so they're credible, suddenly we can change this industry and attract new capital coming into this industry. It's a real opportunity because a lot of these companies can easily get on board with this. They can easily begin to change that communication. And they can easily begin to go to some of the bigger institutions in the world and say, we're on top of our risk. This is where we are, and we want to have your money.
So how do you do that, Jamie?
Yeah, I mean, look, it can be investors want impact. They want to see that the risk matrix, the different topics which relate to risk. So on one side of it's technical. Obviously, we're always trying to improve and enhance and how we can mitigate geological risk or whatever it is like that. But let's be honest, over the last 25, 30 years, and I've been in this industry for 35, 40 years, we've done a really good job on that. These 43 101s and, as difficult and as complex as they are, but the JORC reports, etc., they've done a really good job of improving the confidence of what is in the ground before we go and start developing and ultimately producing. If you take a typical development project, you've got a social license to operate thing, which relates to social and environmental things. You've got relationships with governments. You've got permitting, which takes too long, but we can do many things to improve that and improve the confidence of permitters. And so your question, Christian, is how do we do that? Well, very simply, provide an independent, credible, mining-specific sustainability assessment, which internally, the management can prioritize the issues with which they can then mitigate. Externally, they can raise the confidence and trust in those stakeholders and investors. It's actually relatively straightforward.
I have a question, though. I think, are we really talking about institutional investors? And I'll tell you why. A few days ago, maybe it's been a few weeks when gold really started to take off, I went and I picked 7 or 8 gold names, juniors, and I bought them for one reason only. I thought they were going to go up. And some of them did, by the way. And I don't know anything about their permitting, if I'm being honest with you. They were big deposits in good jurisdictions, in Canada. And I didn't even give one thought to responsible investing or ESG. The only thought I had is I'd like to make some money. That was my thought, right? And so I asked the question to you, like, is this work really focused on BlackRock, to pick a name, or or whoever those big names are these days? Because I think when I think about myself, when I'm slinging around money in these juniors, my first thought is like, how do I make money? And it's not necessarily about some of these other things, which I'm not saying aren't important. I'm just trying to think about in practice.
Yeah, look, I don't want to go on too long here. It's a really important question. I think the first thing to say is we're using the word investor. The breadth of spectrum of the word investor is massive. You've got, shall I say, the high net worth individuals, the people who want to have a bit of a trade, like what you've just described yourself. On that side of it, they're not going to take a moment's interest in the thing as long as if they think they're going to make money because of a gold price running, they're not going to be interested. But then you go down to the institutional capital, because every single project that you probably are dealing with, that management team wants to get into production. That management team wants to take the asset from an exploration stage into development and into production. Hopefully, or maybe at some stage, it will be taken over on the way. At every single moment along that line, you're now getting more detailed due diligence coming in. So you take Philip Clegg from Orion last year, who's talking on a podcast with me. He said sustainability is the number one issue at investment committee. They've done all the other work. They've done their technical DD. They've done everything. Is that investment committee basically got its reputation on the line because they're going to mess up on social license or something? So I think we have to just recognize there are different spectrums of the investor matrix. And I'm not here to push sustainability onto high net worth individuals. I mean, just realism tells you that. I mean, it's just realistic. But if we're going to take these projects, everybody complains about 2 things, Anthony: permitting process and the availability of capital. That's all they care about. And
so actually, what your focus, which I think is important, is you're looking at these junior and mid-tier and large cap companies and saying, you're going to build a mine. You want to build a mine. And in order to do that and attract the capital you need to build that mine, right? Because it's one thing to say I'm going to build a mine, it's another thing to finance it. In order to bring in those big institutions, you just named Orion, but in the mining industry now, there are probably 6 or 7 PE funds that kind of control the levers of capital. Yep. The overlords of mining finance there are private equity fund managers sitting in London and New York and Toronto and where have you. So in order to get these types of individuals and groups to come in, you need this type of reporting and engagement that your guys are doing at Digbbe. Community engagement, thoughtfulness around environmental issues, thoughtfulness around local issues. And that's really the offering and the kind of the point you're making and what you guys are trying to do. Is you're trying to kind of...
Yeah, I mean, look, my mission's simple. My mission's simple. How can we bring more money into this industry easier at a lower cost of capital, which gives a higher valuation, and therefore we can provide the mines of the future? and hopefully give the shareholders, the stakeholders, all a win-win. Simple as that. Okay. The key point here is mine operators or mine developers who can demonstrate responsibility are going to be more aligned with the modern day investor, institutional investor, in order to access that capital at a lower cost.
Institutional investors. I think that's the
exactly.
Point. Like that,
yeah.
And by the way, they write the big checks. The institutional investors are
they
the
write.
ones.
Look, you can't expect the high net worth individuals to fund a $400 million mine.
Yeah.
Typically. So there are a few instances you can, but typically. So how do we take these companies, give them what they need in order to demonstrate leadership, provide a more compelling communication package that effectively reduces the time of that due diligence and gets with a better outcome quickly? So I kind of would put a 3-point plan there. First of all, we need to recognize the investment space has changed. They want leaders who can demonstrate risk mitigation. And I mean, again, I'm talking slightly generically here, but the CEO of the PRI just came out and said that asset managers are crying out for asset ownership leadership on responsible investment. Sustainability has been embedded into the financial big institutions' data gathering for due diligence. And it depends on where you are on the spectrum as to how detailed you need, as to how light you need. But it's embedded because they want lower risk, whether you're a generalist or ultimately a private equity guy. So the 3-point plan: recognize that the investment matrix has changed over the last 15 years. Secondly, give them the information in a credible and easy to read format. And the third thing is allow them to be able to compare and contrast. In other words, carry on with an annual monitoring process in order for them to be able to compare and contrast as to where those management teams are going in terms of their journey.
Right, Digbbe, are you like, what's the name of a company that's building a mine right now? Canada Nickel, Mark Selby. He's got this great project in Canada. He's moving forward. Does someone like that come to you and then basically hire Digbbe, kind of like you would do for 43-101 or whatever, to write a report? Or do you write them and then sell them to investors? Like, what's the model on your guys' end?
Yeah, the model is the former. So they come to us. We know Canada Nickel quite well. They come to us and they see our offering as an internal and an external benefit. In other words, how can we lower risk internally so that we can communicate more effectively externally? So they come to us, we charge them, think about $25,000. It does depend on the status and the number of projects. It's nothing. I mean, if we can't add millions of dollars to Canada Nickel or any other company like that as a result of mitigating risk because of a lower discount rate or a lower cost of capital or whatever else it is, I mean, it's ridiculous. Thank you for saying that, but I mean, it's ridiculously cheap given the benefits and the value add that you have.
Are there other Digbes out there? Like, do you have a bunch of competitors or like our accounting firms like this Deutsche, not Deutsche, that's an investment bank, but do the accounting firms provide this service, or is this something that you?
So nobody does what we do. No, that I'm aware of does what we do. In other words, mining specific, aligned to global standards, and right-sized. In other words, exploration, then development, and then production. And the feedback to the companies. Sorry, say that again?
You said aligned to global standards. Like, what does that mean, that global standard?
Yeah. So roll yourself back to 2021, 2022. Everybody was shouting in ESG about, the ABC of the acronyms going on in ESG. And there were so many global standards. Nobody knew which one to do, how to do it, and to effectively go forward. And it was a mess. So in working with different groups, I mean, BlackRock and Orion were the two companies that came to me to suggest to do this. But then I included Sibanye on the operator side. I included BMO, Gowlings on the legal side. There were a number of different entities. What we did is we amalgamated. So we mapped out 35 global standards, and we wrote mining-specific, right-sized frameworks, exploration, development, production, so that and then anchored every single question into those global standards. So we used the global standards, but came up with a Digbbe framework, which was right-sized, and therefore addressed that confusion.
There's been, trying to make this idea of risk pay, environmental risk, all this sort of stuff. There's been a movement to sort of charge a premium for the environmentally sourced products.
Yeah.
The London Metal Exchange recently has sort of said that maybe they're going to start looking into a different pricing system,
Yep.
which would alleviate some of these issues that, you're talking about making the responsibility of a risk pay.
Yep.
How's that going?
So, Christian, it's a really good question. There were two or three angles on this. First of all, I don't see the risk. I don't see the metals premium being despite the LME announcement quite recently, being a significant part of the commodity environment. But what I do see, and it's almost the inverse in a way, is, and this is, I think, being proven today, is off-takers giving preferred status to particular assets or companies as a result of responsibly mined commodities, and therefore avoiding discounts in the future. So I just feel it's difficult to move to green premiums on a big basis in these liquid markets. And I kind of see more likely this responsible operator thing where you can effectively get offtakes on that. I think that's my short answer to it. That's not to say you're not going to have some contracts. I mean, LME already have some contracts in nickel and other things which do have some green premiums. I'm not saying they're not going to exist, but I think if you're looking at the big picture as to what is going to be the big volumes and the big values, I think it's probably more likely to go down the route I've just said.
So how are you calling it then, Jamie, this latest volatile moment for risk and responsibility? Is it boom, bust, or BS?
I mean, I think my view is that maybe I'm a naive optimist, but it's just a matter of when, isn't it? I mean, I've been here for too long. Cycles always have become cycles. And it's amazing how many times we try to call this next up cycle and we keep on getting, kind of a kneecapped. It's inevitable to me that the demand ultimately is going to continue to go up. Commodities, as Anthony said at the beginning of the podcast, we still need mining. So, and there's ever increasing requirement because of reputational risk to avoid the reputational damage which mining has historically been involved in terms of its legacy. So I think we're getting there. It's just, wow, it's taking a long time, isn't it?
Yeah. Well, at some point, there will be shortages, right? It's just a matter of whether that's tomorrow, the next day, or 10 years from now. But if you don't build it, but you continue to increase consumption, eventually it's not going to work.
I think that's right. I mean, we just want it to be in our lifetime.
Yeah, make a little money. I think it's great that you're sort of helping now to try to bring that capital back in, because the longer it goes without having these fund flows, and the longer it goes without Western capital building this global supply chain, the more China continues to have control globally on natural resources. And I think that by creating these reports and doing this this type of thing and allowing the BlackRocks and Orions of the world to invest, it's a great product and it's important. So I really appreciate you coming on. And
can I just add one thing? Can I just add one thing? I mean, it just relating to what you just said. Look, everybody talks about rebranding the mining industry, and I mean, I agree with that, but I get frustrated when people talk about it without actually having a plan to do it. We've got a really, really great opportunity for transformation at the moment. And, when does money start to flow into real assets as opposed to the tech world? At some stage it's going to happen simply because of the economics. I mean, the sector trades on 3 to 4 times cash flow. It used to trade on somewhere between 10 and 14 times in the 1990s. So, and you go back to all of that other things. So what can we do to effectively align ourselves as an industry to modern day finance? And what can we do to enable them to raise their confidence and trust so that they can begin to put money into it? And I think if we can give these investors something easy to understand and do that, we can definitely begin to encourage that capital to begin to flow our way if the cycle on prices obviously needs to come through as a tailwind as well.
I agree. And on that note, Thanks for joining us, Jamie. Christian, any last words before we go?
Don't forget to click subscribe.
All right, appreciate it, and best of luck, and
Good.
hope to have you on again soon, Jamie.
Jamie,
Cheers.
thank
Thanks very
you.
much indeed.